Hi and welcome to this video which I'm recording from the head office of one of my favourite UK lenders. I'm here in Regent Street in Mansfield and I'm joined by Paul Lewis of the Mansfield Building Society. Thank you for having me, Paul.
Most welcome.
Would you mind just telling us a little bit about you and your role within the Building Society?
Yeah, absolutely. So I'm National Development Manager at the Mansfield Building Society, which in theory means that I manage the intermediary team. Lots of building societies have different roles as to where it would appear. Head of intermediary, National Development Manager. So my job is to manage the team, manage the distribution strategy that we have across the market, and sort of pinpoint areas that we need to be looking at working with. I think the major part of my role is dealing and working closely with the mortgage clubs and the mortgage networks, and like I say, expanding distribution that way.
Yeah. And a bit more about you. How long have you been with the Society for?
So, 12-month anniversary.
Oh, wow, okay. Congratulations.
2 weeks ago. 2 weeks ago. So, yeah, I joined the Mansfield having had 15 years working for a high street lender, shall we say.
So you've been in the industry a long time then?
Yeah, absolutely. Absolutely.
Good. Fantastic. And Mansfield recently underwent a bit of a rebrand, didn't it? So tell me a little bit about that.
Yeah, so I think the major part for the Mansfield, it wasn't a case of reinventing. It certainly wasn't that. We had a presence. We had our place within the market and again within the building society sector. I think the major part is we just wanted to refresh and go back to heritage. We embraced the stag. People aren't aware that Mansfield was literally our head office was half a mile from the actual centre of Sherwood Forest.
Yeah, I saw that on the way in this morning, actually. I was on the phone to the other half and I saw it pop up and she said, I might meet Robin Hood today, which I don't think's going to happen. No, I didn't know that, to be honest.
Probably not. Fry tuck, maybe.
Yeah, that's it,
it was a case of embracing that. You can see the colours that we've gone with. We've got the coal grey in the background to obviously feed into the colliery side of things, obviously with Mansfield. But again, heritage with the stag, the king of the forest, and try and embrace that and move it forward. And it's worked. It's been a fantastic addition to what we have when we're out and about on the road. Yeah. And it gave me an awful lot to shout about as well in the meantime.
And how's that been received by the local community?
Yeah, fantastic. I mean, I'm not going to say small. We're not a small mutual building society. We're a mutual building society. We're here for our members, here for the community, pay an awful lot of money out to the community with the sort of aspects that we have that are going on in the wider community range. And from that side, they've embraced it. We have more announcements that are potentially coming as well. Right. So I won't say too much about that. Sure. We've just recently opened a new branch in Sutton and Ashfield as well, which is only a couple of miles away from here. And again, that's gone down very, very well. Yeah. Things are going very, very well and the community feel part of what we do. Yeah.
So in a market where it's doom and gloom, you guys are opening branches still?
Yes, absolutely. So we've got 4 branches currently, talk potentially of another 2 more. So again, that'll be announced as and when. But yeah, definitely going in the right direction. And from our side of things, yes, we want to grow, but we want to grow the right way. And again, you do that cautiously. Sure,
fantastic, good. Obviously, Mansfield offer a range of services. Today we're going to talk about mortgages.
Yeah, sure.
What would you say are Mansfield Building Society's unique selling points on their mortgage proposition?
Well, I think the major bit, we're not a vanilla lender. We fully understand where we sit with that. We need to work within the niche area, and that's where we sit. We class it as being the grey area, so it's in between your vanilla and your murky. Yeah. Yes, we do offer mortgage products that would touch on adverse, but again, we will put in black and white as to where that would sit. Sure. But we constantly want to go to the underserved areas. So from that side of things, we're constantly looking at niches. The fact that we don't credit score, we view credit reports, but it doesn't matter to us whether your credit score is 99, whether it be 11, it makes no difference. Yeah. So we're a common sense lender, and we try and take cases apart that way. I think USP product wise, some of the best products that we've got, I would say, or the most popular would be family regulated buy-to-let, which we would treat as a buy-to-let. So from the affordability aspects, we're not looking to try and make it complicated. Mother or father looking to buy a property for son or daughter to live within, are they going to charge them full market price for that property? I mean, I'm from Middlesbrough, the chances are my parents would. They'd probably be looking to make a profit. But with that, we appreciate where that sits. So again, we're just looking for the affordability to cover that side, and obviously we can use top slicing should we need to with what's in the background. So that probably is the one standout. But again, as I say, we've got a wide range of products that do exceptionally well. We sit well within the shared ownership space. We offer 95% of share. We'll consider Section 106s. So you're seeing a lot of the high street lenders moving into the shared ownership space. We've been in that space for 8 years now. I'm proud to say that we have, and supporting the people that are looking to obviously get onto the housing ladder that way. 100% mortgages potentially. Won't comment too much on that, but are they coming back? Well, in all honesty, we offer them still, bizarrely, through our family assist mortgages. So we offer a 100% loan. One thing that we would be looking in England and Wales, we'd be looking to either take 20% in savings with ourselves and hold it, or we'd be looking to take a 20% charge on the property. We've just launched in Scotland last month. In Scotland, slightly different from that side. It wouldn't sit there with the savings side, but again, we'd look at the 20% charge on parents' properties, should that be the case. So instead of it being guarantor, it's run that way. So they're kind of the standout ones, I would say.
Good. So just to summarise then, if somebody has had issues with credit in the past, of course it's all subject to underwriting and assessed on an individual merit, but you would consider an application for someone that hasn't got a squeaky clean credit score.
Absolutely, and I think the thing that's worth pointing out, and it's the same for me, it's the same for yourself, Tom, life happens. No one is in control fully what goes on in life. Marital disputes, bereavements, whatever it may be. Credit score and credit reports are great. It gives you a background, but they can also pinpoint areas where we can see trends and things that have happened. If we can make sense of that, we can understand what's gone on. Everything else seems where it needs to be, and overall the risk that we would view is worth taking. Absolutely. And like I say, we do have our versatility range, which will identify where we would sit with CCJs, bankruptcies, debt management plans, payday loans. Hate that phrase. But it's all on there, and it would spell out where we would sit.
Good. So it's safe to say that you do treat people as individuals then, rather than a computer says no process.
Absolutely. Lender by people to people. So
yeah, fantastic. Good. And I know there's a lot of first-time buyers that watch my video. So you touched a little bit there on shared ownership, and funny enough, I think that's when I first started working with Mansfield Building Society about probably 5 or 6 years ago now. I did quite a lot of shared ownership applications with yourself. Is there any other areas of your proposition that would be suitable for first-time buyers?
Well, I think this is the bit. Because we don't use credit scoring, how would an 18, 19, 20-year-old have built up credit if they haven't had a car or a car loan, a loan for whatever it may be? They haven't got a mobile phone in their name. They haven't had a chance to build up a credit score. We don't need that. We don't look at that. It goes the other way. Our chief exec is hugely passionate about later life lending. Again, we view it the same way from the common sense side of things. So, yes, we wouldn't be able to see a guide of credit for first-time buyers that are looking to hop onto the property ladder, but we also wouldn't judge it the same way for a later life lender. That, again, is on retirement income. But, again, can't get where they need to for the affordability side of things or whatever it may be. So, again, we've got products that cover everything. But, first-time buyers sit very, very well with the Mansfield. Definitely.
So if you've got a first-time buyer that's quite young, hasn't got an established track record of repaying credit cards, bank loans, car finance, again, subject to underwriting, you can potentially consider an application for someone.
Absolutely. And as I say, for that, we would take it up to 95%. Absolutely.
Fantastic. So I think that's another key point in there, is that you do go up to a 95%
absolutely.
loan to value on that as well.
Absolutely. And
so I think the 95% proposition is an interesting one, because particularly in my client base, I have a lot of clients in the sort of South Northamptonshire area, Oxfordshire area. House prices are hugely expensive, and that's stopping a lot of first-time buyers or even next-time buyers buying a property, because they're needing 30, 40, 50, 60,000 pounds to be able to put down a deposit with a lot of the lenders. So to see lenders offering 5% propositions, again, that's going to encourage more people to...
absolutely. And long may it continue, because irrespective of what we hear, house pricing is still, for me, what I can see, increasing. People say it's not, but it is, let's be fair. So, absolutely.
Fantastic. Good. And you accept a lot of your business via intermediaries, so mortgage brokers like myself. So tell me, sort of, what do you see the advantages of for a consumer going via a mortgage broker to obtain their mortgage from a provider like yourself?
I think the great bit from our side is that they've sought advice. That they've sought advice by the experts in that field, that have got open market to look and see which lender suits. It could well be a service proposition. It could well be a speed to offer, whichever way that it would be. But I think the great thing is that those clients' individual needs have been taken into consideration, and a lender has then been matched accordingly. It doesn't always work out that you'll go with the first lender or in some cases the second lender.
Yeah.
This is the benefit there when I talk about the credit scoring side of things. We're not looking at a credit score, so obviously there's been several attempts and fails.
Yeah.
Again, no issue to us. But from that side of things, as long as we feel comfortable that the client has been given the options, perfect. And again, I think advice is paramount there.
Yeah, good. And I guess you've been quite open and said that you are a smaller lender.
Yeah.
So I guess your products won't always feature on the best buys, online comparison sites. So I guess you do rely heavily on brokers having a breadth of knowledge and understanding and expertise about your proposition in order for you to obtain applications. Yeah,
absolutely. And again, understanding what the client's needs are. Again, what sort of time restraints are in place for the client. If it's a vanilla case, if it's going to go straight through, you could get an offer out within a couple of hours. Now, yes, we don't sit in that space. We manually underwrite. So again, there's positive aspects of that. There's negative aspects if it's time. But again, each lender has got their own USP, their own area that they work within. And that's where we sit.
Good. Brilliant. And in terms of the market, everyone, like you said, everyone's got their opinion in terms of what's going to happen. We've got Brexit on the horizon. What do you see the biggest changes and challenges in the mortgage market over the next couple of years?
Hard one to answer because I started here a year ago, went to an event, and one of the questions that was put to the panel was Brexit. No one wanted that microphone, as you can imagine.
So no one landed you right in it. Yeah. Sorry about that.
No, it's fine. No one really knows, and I think the thing is that the world is going to keep on spinning. People are going to still keep going to work every morning. Yeah. Yes, there's going to be impact. We don't know where it's going to fall. What's going to happen to interest rates? Are they going to go down? Are they going to go up? No one really knows. No. I personally, from a personal point of view, I don't think much is going to change. As we look around, houses are being built all over the place, and there's more demand for properties. So do I think personally it would impact? I don't think so, no. Certain areas, possibly. Holiday buy-to-let, people looking to purchase are, I guess, is tourism going to boom? The hope is that it does, and people are coming into the country. Hence the reason why a lot of lenders went with holiday buy-to-let. People opting for a staycation rather than a vacation during 18 and 19. So demand would say that it is, but I can't see too much changing. I really can't. And I think, as I say, if it does, we'll react to it. But 3 years on from now, I don't see much difference. The same names, I would imagine, are still looking in the same areas that we're looking in, and we will still, as a mutual building society, look at the next niche that is presented.
Right.
So from us, I would guess there's just more opportunities that will arise and more areas that we can take our lending into. Yeah,
good. So there you go, a positive outlook on the future from Paul.
Don't quote me.
So that's all from us today. Thanks again, Paul, for inviting me over here to Mansfield Building Society. I hope you found that useful and given you a bit of insights, behind the scenes footage of lenders. So as always, if you've got any questions or queries regarding the video today, or you want to find out about your mortgage options, feel free to get in touch. I would love to hear from you.